It's been a week since Arcimoto's 20-for-1 reverse split, and just as I predicted, there would probably be a small bump up in the price, and then it would continue trending down. That's exactly what's happened, particularly over the last 2 days. Hi, this is Anthony. Welcome back to my show. As I launch right in, I would sincerely appreciate it if you'd hit that subscribe button if you haven't already. It really helps me out in building this channel, and it doesn't cost you anything. I've had a couple viewers ask me not to make videos about Arcimoto because they think that I'm driving the price down. I truly wish that I was this powerful and influential as being able to move the stock market, or at least individual stocks. I am not. Those videos that I do about Arcimoto are not moving the stock down. Their terrible financial fundamentals, management problems, the high cost of labor in the United States, and difficult economic times are all in part responsible for the price sliding towards the netherworld. I want to keep today's video short, so I'm not going to look at the fundamentals today. I've looked at them many times in other videos that I've done about this company. I always encourage my viewers to look at the financials of the company before they buy, sell, or hold any security. A company may have an exciting product, they may have a great story, they may have a wonderful website with cool videos of their products being used, but if they're losing millions of dollars a quarter with no end in sight, it's probably not going to be a prudent investment. The whole purpose of investing in stocks is to make money. Buying stock in Arcimoto is not investing in a green future. When you buy stock in that company, you are buying from somebody who is selling, and in this case, usually somebody who is selling because they've lost money on their investment, often a lot of money. Obviously, the one exception to this is if you buy at a public offering when the company originally issues shares, or subsequently when they need more money to stay afloat with a secondary offering. If you buy it that way, then your money is actually going to the company, but otherwise you're just buying from another unsatisfied investor. And even if you buy at the IPO, if the company is using a SPAC, then your money might not even be going to the company directly. So don't try to invest in a green future by buying stocks. Buy stocks because you believe they're going to make money based on market economy fundamentals. Let's look at a few charts of Arcimoto. Stock symbol FUV, which of course stands for Fun Utility Vehicles, but don't let the fun vehicles fool you into believing that the stock is a fun investment. Here's today's chart. As of the time that I'm making this video, the stock is down about $1.50. That's around a decrease of 20% just in a few hours today. Yesterday, I believe it was also down about $1. Here's a chart for the past week. It's now been 7 calendar days since the reverse split occurred. In 1 month, you're down 47%. Year to date, you're down nearly 96%. If you would have bought at the IPO, you'd be down just over 94%. And remember, all of these charts are adjusted for the recent split. So you don't need to write me and tell me that they're incorrect. They are not incorrect. And if you would have been unlucky and put $637.40 into the stock just under 2 years ago, it would now be worth $6.16. Hopefully nobody's holding on that long, but you know there probably are. So I'm going to wrap up here what I want to say for the stock in a second. The reason that I make these videos is not to make people feel bad or rub it in. We all, at least on occasion, purchase shares of stock that perhaps we shouldn't have because we didn't look at the fundamentals before purchasing. Sometimes we see something going up and we want to get in on the bandwagon. Usually when we do, it's right at the top. But sometimes the shares keep on climbing and we have paper profits. That's when the time to sell is, and to take those profits. And when the price of the stock starts to slide and then we're in the red, we want to hold on until it recovers. Sometimes that happens. If you look at the early days of Amazon when it crashed down to just a few dollars a share and held on to today, even though it's down quite a bit recently, you would still be quite happy with your returns. But for most companies, that doesn't happen. If you're still a shareholder in the company, I encourage you to look within yourself and ask yourself, should you continue to hold this? If you think that the company is going to have a turnaround and you're going to make money, then why aren't you buying more at these even lower prices? And perhaps I'll be wrong and they'll turn the ship around and start making money. I certainly hope it will, because I want them to do well and I want their investors to do well. But I'm not hopeful for their future, honestly. Now, I've said in many other videos that their expensive electric tricycles are nothing special. The technology is nothing special, and anybody else could really manufacture these. You already have a company based in Canada whose stock symbol is Solo that is making similar products, and I suggested that if a Chinese or an Indian company decided to make similar vehicles overseas and then ship them here, they could undercut the price that Arcimoto has to charge because of our higher labor costs in the United States. And I see from a short Forbes magazine notice that there's a Bolivian company called Quantum Motors, which evidently is setting up shop in Mexico to manufacture similar vehicles, supposedly in the $5,000 range. If you're a die-hard investor in Arcimoto, you might at least familiarize yourself with Quantum Motors to know what the possible competition is. There's an article from MexicoNow.com, and I'll have the full text of it in the show notes. Also, if you do research, because Quantum is such a common name, there are other similar companies and products. It seems that there's actually a motor that somebody calls a quantum motor. So that may be a little confusing when you're searching for EVs from Quantum Motors. Again, I welcome comments and questions from all my viewers. As I point out, I used to own a couple shares of Arcimoto. I no longer own any shares, and I'm not shorting the stock. This is an extremely risky investment. I believe that for some people, having a small percentage of their otherwise well-diversified long-term portfolio might be appropriate for risky investments. So if you really want to gamble, you can do so with Arcimoto. But honestly, if you want to gamble on penny stocks, there's probably a lot better ones that have at least some prospect of making you money in the future. Please be sure to hit that subscribe button and leave a comment in the comment section and click the like button. All those things really help me out in building a following. I really appreciate your time. Thanks for watching and good luck investing.